Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And you can tune in here to get hear topics that are important to the home business community. All right, let's talk about 5 reasons why an S Corp may be a bad idea for you. All right, so how did I get here? So over the past couple weeks, I have had a few consults regarding S Corps, and they came from Arise IBOs specifically. So this is why I said, if you know an Arise IBO, that this may be a good topic for them, or someone who's thinking about it. Someone who's thinking about it is definitely better to get this to before they get into stuff that they're not ready for. All right. So let's talk about the 5 reasons why S Corps may be a bad idea for you. Now, the reason that people, look at S Corps is because they hear about the tax savings that are available as an S Corp that may not be available as a single member LLC or as a sole proprietor. But the thing about it is that, and that tax savings is generally the self-employment tax. But the thing about it is usually that is just based on federal guidelines. Nobody's talking about states. Okay. So let's talk about these 5 reasons. They're really not in any particular order, but they're all important to me. All right. So number 1, your company is not making enough money. Listen. When you're first getting started out, 9 times out of 10, an S Corp is not a good idea for you, okay? This is why people start out with an LLC, because the LLC allows you the flexibility to be able to elect to become an S Corp or C Corp later on, okay? But starting out as an S Corp generally isn't necessary because you're not making enough money to start out with. And so what I mean is, if you're starting out, and let's say even in your first year, if you boss out, and let's say you make $50,000 in your first year, that's great, but that's not necessarily a reason for you to go and start an S Corp, okay? Because you're not really making enough money to get the tax benefits or for the compliance. The compliance is necessary for S Corps, okay? So number 2 is not paying yourself. One of the requirements of an S Corp is to pay yourself a reasonable salary, okay? Even though there is nothing specific written from the IRS about what a reasonable salary is, there is a way to get to that number, all right? And so let me give you an example. There was a case of a CPA who got in trouble with the IRS because he was not paying himself a reasonable salary. So what he was doing is paying himself $20,000 and then taking the rest of his income as distributions, okay? But the IRS said, hold on, boo. If you were to hire someone of your caliber, he's a CPA of 20 years. If you were to go out and find a job, would you expect to make $20,000? It's like, no. If you had to hire a CPA of 20 years experience to replace you, could you get away with paying $20,000 in salary? And the answer is no. So the IRS looks at someone of your experience and your caliber to say, okay, a more reasonable salary would have been, let's say $90,000 a year, $100,000 a year. So they went back and reclassified his income to where he had to go back and pay back employment taxes. All right. Because he didn't pay himself a reasonable salary. Okay. So that is what is required of an S Corp. So you have to ask yourself, if I had to hire someone to replace me, how much would that cost? Or if I were to go out and get a job in this exact same position, how much would I expect to earn? That is the reasonable salary. That's the reasonable salary requirement where you go and you find that out. Okay. So you just don't go and say, okay, well, I'm going to pay myself, $10,000 just so I can pay myself and then, pay minimal employment tax and then take the rest in distributions. The IRS don't get down like that. They ain't that stupid. Okay. All right. So, number 3, not really understanding some of the consequences. All right. So let's talk about a compromised tax status. See, one of the things that you have to know as an S corporation is that you have to be a U.S. citizen, and all of your shareholders have to be U.S. citizen or resident alien. Now, you and your spouse also counts as one person. So what does that mean? Well, let's just say, for instance, that you are single, you got your S Corp, you go on vacay, you go somewhere like Brazil, you go to Jamaica, you go somewhere, get your island life on, you meet the person of your dreams. Whoo, sparks fly, everything is all hunky-dory. The moment you get married to a non-U.S. citizen, you revoke your S Corp status, because husband and wife, spouses, however that comes out for y'all, okay? You count as one person. So not knowing that, you can be in marital bliss and business hell, okay? So you have to, and then when you compromise your tax status, the IRS can charge you back taxes for 3 years and also revoke your S corporation status for 5 years. You have to wait 5 years before you can become an S Corp again. Okay. So even if you decide, you know what, the S Corp is not for me, you can revoke your S corporation status. But if you do that, you cannot, with that particular business, you cannot become an S Corp again for 5 years. Okay. They are very serious about that 5 years. Okay. So let me go. Okay. So that was number 3. All right. Also with compliance is understanding that, when it comes down to tax savings, we hear about the federal tax savings, okay? But what people don't talk about are the state requirements for taxes, all right? So with the S Corp, okay, you can save on the self-employment tax, okay, which in some cases is great. But the part that people miss out on is we've got 50 different states and we got 50 different rules for S Corp reporting. So there are some states that have a minimum tax due that's regardless of the amount of money that you make, okay? Some of those states are like California and Massachusetts are the two right off the bat that I know of. Also, there are states that charge based on your gross receipts. It doesn't matter your profit. It's based on your gross receipts. So if you make $300,000 in gross receipts, but you only make $200 in profit, well, your tax is going to be based on that $300,000 in gross receipts. Okay. So you have to understand what your state requirements are, not just federal, because sometimes when you do the math, it totally is not worth it if you are not making enough money to pay for all of this stuff. Okay. So that is, understanding what the federal requirements are. Most people you'll find that on the internet without trying hard. But when it comes down to understanding your state requirements, this is when you need a professional that's going to look and be able to read and understand what your requirements are so that you can get the full picture and make an educated decision, not just based on what you heard on Facebook. Okay, so even still, and what do I tell you guys all the time? Even though, yes, I am a tax professional, if you can watch all of my videos that I have made, but that does not give you complete tax advice for your situation. It just doesn't. Okay, if I'm telling you that as the tax professional, please believe me. Okay, I'm gonna need that from you. All right, and number 5, lack of bookkeeping. Yeah, the simple thing, lack of bookkeeping. So here's how I got here. So when I have someone coming to me and say, hey, I want to be an S Corp. Okay, let me see your books. And then I get crickets. Like, okay, so when you have an S Corp, bookkeeping is, first of all, having a business, bookkeeping is a requirement. Are there some businesses where you can get away with having a spreadsheet? Absolutely. But when you start talking about bossing out and having all of these different types of business structures, you need bookkeeping. We are talking about structured bookkeeping. I don't know who is calling me right now. but it's just going to have to ring. All right. But we're talking about structured bookkeeping. We're talking about, having some sort of accounting system that shows, what your income is, what your expenses are, what your cash flow is, all of that stuff. You have to know this about your business. And the reason I'm talking about Arise IBOs is because I have a few Arise IBOs that have come to me and said, hey, I have this S Corp and oh my gosh, it's not what I want to do. Like, okay, well, you know what? It's kind of too bad, because if you revoke your S Corp status, then you can't become an S Corp again for 5 years. You just can't do it. Right? So, like I tell people, please, bookkeeping over business structure, compliance over business structure, all of that stuff. Bookkeeping and compliance is more important than your business structure. You can fix a business structure, but if you got jacked up books negates all of the business structure in the world. It really does, because it's how you manage your business, which is going to determine whether or not you have the liability protection that a corporation, a C corporation, an S corporation, or an LLC offers anyway. Okay? So if you don't have that, you guys, it will kill your entire business. Because see, if you have proper books, then you know what your gross receipts are. You know what your accounts payable. You know what your expenses are. You know what your cash flow is. You know the peaks and valleys in your business. Bookkeeping tells you everything you need to know about your business. And that is a basic foundational structural thing. And so this is why I tell people, when you first get started in business, get you some QuickBooks Self-Employed, okay? And the reason I recommend QuickBooks Self-Employed is because I know QuickBooks will grow with you without you having to change accounting systems. QuickBooks Self-Employed, QuickBooks Online, listen, you will not outgrow QuickBooks. Okay? Unless you are going into some seriously specialized area where there is bookkeeping software specific for that. But in general terms, QuickBooks, you won't outgrow it. It will give you everything that you need. And so I recommend starting out with QuickBooks Self-Employed, because they have I think it's a 30-day trial. Okay, a 30-day free trial. And so then if you look at that QuickBooks Self-Employed and say, ooh, okay, I might need more than this, then you can always upgrade. Okay, you can always upgrade. But this is why I say that, because you know what? A lot of my clients are solopreneurs. We are sole proprietors, and there's nothing wrong with being a sole proprietor. Please don't go and dive head first into some business structure because you think it's a bad idea to get started at the kitchen table. It is not. Everybody starts at the kitchen table or in a garage, okay? Apple started in a garage, all right? So Facebook started in a dorm room. So don't get all high and mighty thinking that, you're not a legitimate business because you don't have a business structure. A sole proprietor is a business structure. But before you go getting off all willy-nilly into business structures, you need to get your bookkeeping tight. So I will tell people to invest in a bookkeeper over business structure. Because like I said, you can fix a business structure. You can't fix jacked up books or the consequences of jacked up books. Okay? For real. All right. So listen, I hope this helps you out, and I will add the link for QuickBooks Self-Employed for you to try it out. Like I said, if you need more than that, you can always upgrade. But start out there. Start out with something to add some structure to your business. If you require help setting up your QuickBooks, you can book a consult with me at homebiztaxchat.com so we can start getting you right, all right? And listen, if your bookkeeping is tight, your tax preparation season will not be hell. It just won't. Tax prep is so much easier when you have bookkeeping. Like you see people sweating, like, oh my God, I got to get ready for tax time. Oh my God, oh my God, my God. If you are doing your bookkeeping on a regular basis, as soon as December 31st hits, you're like, okay, cool, we can push a button, right? And then, so the only thing that you're waiting on documents like your mortgage statement and all of that. And so by February, as a business owner, you should be ready to file your taxes. Because then if you have a tax liability that you might not have enough money for, then you have some time to put that money together. And if you have proper bookkeeping, you can start earmarking funds for taxes on a regular basis so that you will have the money come tax time to write the check. Okay? So thank you guys so much. Like I said, I hope you got something good out of this, something to chew on. Like I said, if you need some help setting up, you can book a consult at homebiztaxchat.com. And that's it for today's show. Again, Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish, and you can come here to get your questions answered about your home business taxes. All right. Have a great day, and I'll see y'all next time. Bye.